Well, hello there, folks. Austin Baumgarten here with Keller Williams Realty Northwest Montana and Hidden Homes Montana. We are here at podcast number 4. Is that right? I believe we're on number 4 right now, and we have an awesome new guest, Ed Nissen of Cross Country Mortgage, who used to be of
Lend US.
Lend US. That's right, and so
Yep.
that's a change that just happened recently.
Yep, this past weekend.
I mean, that's very, very current.
Mm-hmm.
Excellent. All right.
Yep.
Well, Ed's here specifically because I've worked with Ed over many different deals over the past couple years, and he's a lender that I trust working with, and it's someone that's very knowledgeable, basically about what's going on in lending currently. So we thought we would bring someone in that's talking about that. That's not the specific point of the podcast usually, but we're going to also be talking about a lot of things kind of in Ed's life. When it comes down to goals, that's what the Hidden Home Show is kind of all about, is like, what are the goals for 2022 and what are you going to be doing with your life? We like entrepreneurs, and I've sat down and had lunch with Ed as well, and we've just talked about kind of what our day-to-day routines are, and how we've kind of built our businesses, and a lot of that kind of aligns with each other, is what I kind of found. So anyway, we want to shine some light on lending today. We also want to shine some light on Ed and his new change. And I guess it's going to be a nice organic conversation. So let's go ahead and fire right into it. I want to know what the origin story is of Ed Nissen.
Yeah. Okay.
Like before lending, you know,
Yeah.
like what what did you do before lending? That's the question.
Yeah. Well, I'll start from the beginning. Born and raised California boy. I remember getting grief for moving here 31 years ago, a little bit, even way back then, for being a Californian.
Okay.
My first job here was mowing hay down on the Big Hole, and through some friends, that was like walking into a John Steinbeck novel. It was a lot of great stories that summer. Came up to Glacier for the fall, worked up there in the restaurant on Lake McDonald, and was going to venture down to Colorado to ski bum for a year. That was after college, and decided to stay in Whitefish. Had various friends come through over the years, and 31 years later, I'm still here. In pre-lending, I did everything from, I started off in Whitefish as a carpenter, decided that took up too much of a powder day, so then I started waiting tables, figured out that waiting tables at the Hell Roaring Saloon or bartending was the way to go. Ended up going down to Tupelo for quite a few years. And then eventually I did get a real job in the outdoor industry for a couple years once I got married and had kids. And then, realized I needed to kind of get onto a longer-term career path, and wanted, because of my history as a ski bum, I wanted a lot of flexibility. I wanted a possibility to make, good money, and I love math, love numbers, always been really good at it. I went to the career counselor, believe it or not, at Flathead Valley Community College, and they suggested I be a realtor or a loan officer, and there was one other thing which I can't remember, and I literally within a week, this is how most things happen to me in my world. A friend of mine who owned a mortgage company offered me a job. Happenstance. Wasn't even searching yet.
Wow.
So, yeah. So that's the pre-lending. And, early in the years, it was, I don't know, I must be slow, because it took me years to get it all. And I did pretty good along the way, but just the last few years, I feel like I've really gained a fun knowledge base. It's really fun to share.
Yeah.
So that's where I'm at.
Awesome.
Yeah.
That's perfect.
Yeah.
Good stuff. I too, originally from California, transplanted back in 2001, and so same thing. It was kind of the same thing about a little bit of grief 21 years ago. So I think a lot of people are what people call transplants in the state of Montana, and but not everyone. I mean, I actually married a native, a native Montanan too, and she's very, very proud of that, and I think that's fabulous. So
Yeah. Cool.
Anyway, all right. So we kind of touched base a little bit about it, but why I mean, why lending other than just maybe like the financial stuff and the flexibility? Like, I mean, there's the numbers there as well, but I kind of wanted to tie into some things we've been dealing with, which is like a
Sure.
different spectrum of buyers, you
Sure.
know, and you know, because I mean, I think you and I, we've worked on anywhere from like a super jumbo loan, which was over $2 million, all the way to like FHA loans and people that are just, you know, kind of struggling just to get by to try to get into a home as a first time home buyer. And so I know we have talked about that. Like sometimes it's that story is what kind of keeps us in
Yeah.
the game too, because it like that's what drives me at least,
Sure.
like closing on a great deal with someone that has been struggling and it's changing their lives.
Right.
So I don't know, maybe I kind of answer that for both of us a little bit, but what can you speak on that?
Yeah, I mean, that's it for me for sure. Like, what I've noticed, because I've done this now for 19 years, is in the past 5 maybe, now I finally have a knowledge base that really benefits people. And I guess that's where I find my joy, is helping people make, you know, a great decision about financing. And that sounds sort of boring maybe to some, but really, when you look at housing, really what I am is some type of financial advisor, right? People go when they have their 401k or whatever, they go and they hire someone to manage their money, right? Well, the other side of that balance sheet is debt. So you've got this huge chunk of debt, whether it's $200,000 or $2 million. It's a big deal, and it's a big part of your life, and it's a big part of your success, how you manage that debt. So really, I'm advising them on the best ways to do this or how to do it. And what's really become important in this market is how to do it, because a lot of people don't necessarily know how can they get into a loan right now or a house. It's challenging for a lot of reasons. And so having that expertise, you know, it's really fun. I mean, I'm working with some first-time homebuyers right now, and it's their dream, of course, right? But same with someone who is looking at retirement and wants to get out of Minnesota and have their place out here on Flathead Lake. That's their dream too. You know, equally important to both people. So to be able to help them with that, and what I like the best, I think, is building a relationship along the way. I mean, everyone says that, and the cool thing about mortgages, I get to know everything about people. Like, I know their personality, I know their finances, I know more about them than many people in their lives. And I have to keep it private. I can't go down and share it with everyone I know, but it's this really interesting piece. But what's cool is that it gives me an opportunity to build trust and build a friendship, and I stay in touch with them afterwards. And now they call me, you know, I have a lot of clients that call me and say, hey, Ed, what should I do about this? What should I do about that? You know, and they're usually financial related stuff, not all topics, but I appreciate that they have a level of trust with me now that they're going to call me and get my opinion. And that's rewarding that I've been able to provide that service to them.
Well, and I mean that's you answered that question great, because that was the thing, is like I know when I bought my first house when Carly and I got married. I was 23, and so we were just having our first baby, and I remember just like I didn't know anything about any of this stuff, but also I had heard, like, you know, when you go talk to a lender, you know, like who are these people that are going to like uncover all these things, and it, like, I remember going in and being like, I know what I've done and I'm embarrassed. You know, and that's a hardship. So I love that you're speaking to, you know, gaining that trust, because that's and developing those relationships for long term, because that means a lot to me. Like I've seen a lot of that happen now, so it's like, you know, it's regular, but there's gonna be a lot of people watching this that might just be a little bit nervous, and it's good that they can go to someone that they can trust, that treats them like a human being and understands that that people have pasts. People have things that have happened. They have the foreclosures on their houses. They have bankruptcies, all these different things. But I've seen, you know, lenders like yourself be able to talk to them, say like, hey, maybe not right now is not the time. Let's get you a plan.
Right.
You know, that's the financial advisor type part.
Yeah,
I think that's really cool.
And I think it's also, you know, addressing their fears, because a lot of people are worried that they're not going to qualify or whatever, and maybe that's why they don't even take that first step. I had someone today. I've been talking to them for months, and they fall off the radar for a while, and I said, well, you got to take the first step to know. Like, maybe you can't, maybe you can, but you know, you got to apply, and then I can figure out. You know, you've got some pieces that could make things happen, but until I really have all the pieces in front of me to work with, I can't. No one can tell you.
Yeah.
You know, so yeah, getting them to take that step and say, hey, let's take a look. Maybe we can own that rental property.
Well, that's the first thing that I always do too. Is that you know, a lot of people will call me and be like, "Hey, I love this house on 2nd Street. I want to write an offer." And you know, my first answer is, "Well, have you talked to a lender yet?"
Right.
You know, it's got to be the first thing, and especially in this market, like having, you know, a pre-approval or a full approval ahead of time is like you must before you even make an offer.
Yeah.
And I don't know, it wasn't necessarily like that the second I got into real estate. You know, you could apply afterwards and all that stuff, but I think that part right there is something that listeners need to know if they're wanting to buy a house. That, you know, if you're thinking about it, the first step is to see what you can do. Yeah. And I always advise people, say, hey, we need to see what kind of credit card you have.
Yeah.
You know, like, what are you able to buy? Because then it's more fun to shop.
Totally.
You know,
yeah.
And what do you feel comfortable with? Like, let's not spend all of your money. Let's see where you're comfortable. You know,
Right.
You might be approved for $800,000, but if you're comfortable at the $600,000 mark, let's go with that.
Yeah.
You know, so.
And that's a big thing, is, like I said, addressing their fears, because they may not, they may not, if they want to buy a new, like I have this person this morning wanted to buy a new primary residence and turn their existing home into a rental. And they thought that they needed to save for 20% down. And they have most of it, but they didn't want to take it all out of their savings. So I say, hey, you know, you can do it with 5% down. So that changes the picture.
A lot.
You gotta, and then you have money to fall back on. And so starting to understand some of those people or pieces is hugely important, so that their fears and they feel more. Their fears are reduced, and they feel more confident moving forward. So yeah, those conversations are great.
Nice. Well, let's do a quick little thing on so cross-country mortgage. I want to sidestep to because that was a transition that just happened.
Yep.
Like you said, like last week.
Over the weekend. Yeah.
Over the weekend. And how's that going? Like, what's the new step? What's the new goal?
Well, the new goal, got through 3 days of training today, so that's nice.
Nice.
There are a lot of, our industry is driven really kind of by the Fed. So the Fed controls the economy in a way, and as you know, rates are going up, and so there's a lot changing in the mortgage industry right now. We're going to see a lot of businesses probably disappear in the next 12 months. And there's going to be a lot of consolidation. And so our owner decided that we would all be better off if we were merged or sold to a bigger company. So Cross Country is quite a bit bigger than Lend US. Okay. It's a really exciting move. We've got a lot more product offerings, which is cool. They're very good at the operations side, meaning processing times through underwriting should be a little quicker than where we're at. We're a national brand, so we're in all 50 states. So I think that side of it's going to be great. It's pretty overwhelming when you change mortgage companies and you have active loans going and prospects and just trying to get up to speed on. It sounds maybe easy, but we all have multiple software platforms we have to work with, and just trying to remember how do I access the pre-approval letter, and how do I get my credentials on that pre-approval letter, and it's not including my NMLS number, so I actually legally can't even send it. So little things like that. You know, it took me all morning to get one.
No, but you got it. You got it to me. He got me a pre-approval letter for some clients, which is great. Thank you, sir. Thank you for pushing through to do that. But
yeah, I mean,
totally
all that
get
stuff, it takes so much longer than what I was used to last week. So that's the big hurdle this week. So,
Okay.
yeah. So next couple weeks, the goal is to just get smooth. Our operations team hasn't fully come over yet. We're going to use our same operations people, but we're using existing cross-country staff now. So a lot of it will be working with the same people and the same teams, which is pretty cool. We're kind of our own division in cross-country. So our owner's been able to keep a lot of the organization intact, which is pretty cool.
Okay.
Yeah.
Good. That's great. I'm excited to hear about the new products because I mean you already offered so many different ones for, you know.
Yeah, they're similar, but there's a handful of stuff that's going to be pretty cool, I think. So, yeah.
Okay. Cool. So let's say I'm a client on the street and I'm coming in. I'm knocking on your door. I'm just coming up into the new cross-country mortgage because I keep making sure.
There you go.
And I'm knocking on Ed Nissen's door and I want a home loan. How would the process go? And I guess, process just in general.
Sure.
And go.
Well, most people call before they come, but it doesn't matter really. Mostly what I prefer to do is more of an interview before I just hand someone an application. And they always have some questions to start, right? But what I like to do is kind of understand, number one, I guess, what do they want, their goals for sure, right? Are they just casually looking? Is it their primary residence? Are they a first-time home buyer? You know, are they looking here and 4 other states? All those pieces are kind of important to know. And so, and I'll go back to the phone call because honestly, 99% of new inquiries are on the phone.
Yeah, sure.
So I really prefer a phone interview because it lets me start thinking and getting my head around what that client is looking for and what level of explanation are they going to need. And, you know, because there's a lot of terms and things, if they're a first-time home buyer, they're not going to know. If they already own 10 rental properties, they're probably pretty savvy. So understanding the client is very important. And then to me, being an advisor, it's important understanding their goals. So, you know, I don't know, maybe like they've got X amount of dollars to put down, but they're about to have a baby. Well, probably not a great idea to sink everything you got into the home because kids cost money. So we talk about that. Okay. And then once we decide that, you know, through that conversation, there's trust built, and we decide really if we like each other. We usually do, you know. And then I ask them if, you know, then tell them the next step is apply online, and then they apply online. And I prefer to have them do that before we meet because they always have detailed questions when we meet. And at this point, I still don't know enough about them. Mm-hmm. So applying online lets them get me pay stubs and W-2s and pull credit and do all that stuff so that now I know almost everything about them financially. I can figure out, you know, which loan programs are going to work for them, what their maximum loan amount's going to be, and then I can get them good, solid answers and information when we sit down together. So that's to me, makes it an efficient meeting when we get together. Mm-hmm. Whereas if they're sitting at the desk while we're doing that, inevitably I make mistakes because you're rushing and there's other questions firing at you and you get distracted. And so I prefer to get all that done ahead of time and be able to give them really clear, concise information when we sit down.
Nice.
Yeah.
Okay.
So that's what that looks like. And it might be a little different for everyone else. I have no idea how other people do it. But
so let's say that, I mean, that part's done, you know, mm-hmm. And when do you think on average do you feel like you get full approvals? Where it's like, okay, I think all this stuff looks pretty stable because I know the things flip flop. I mean, even this morning, I was working with another mortgage broker. My clients were for someone else, and I mean, we were literally flipping the books at the title company, like trying to figure all the stuff out right at the last minute. Like they were approved. It was almost clear to close, then it wasn't. Like there's all kinds of different stuff that I feel like happens.
Yeah.
But what do you feel like your average is where it's just like, I think these folks are probably going to be able to make it happen.
Well, that's hard. Typically, when I issue a pre-approval letter, I have very, very few that fall apart. Okay. I try to vet my pre-approvals really well. That being said, I don't do a whole lot of loans with really beat up credit. So depending on, what your client is like, obviously people with really beat up credit, there's a lot of, as they say, skeletons in the closet, and you can be working through that stuff. Some of it comes down to the lender. I mean, to me, our company would not let anyone go to a closing table without having everything solved. Like, we don't even put loan docs out until everything's solved. Although, like, we don't even have funding conditions normally. But some companies will. I'm not trying to, knock that lender, because there can be things, as you may know, we have to pull a credit refresh, we all do, right before closing, and that updates balances and inquiries on the credit report. So if they went out and bought, a boat, or even bought furniture on a furniture credit card, that can change the debt to income and screw up the deal last minute. So that could be why they're scrambling at the closing table. Or, some lenders will push some conditions to funding, which means you have these things you have to deal with on closing day, possibly as you're waiting to fund or waiting to record. And if the loan officer isn't aware of those, then that could be, an issue. It could be something like they're waiting for a settlement statement. If they're selling a home and they need that money, and maybe everything's funded and just sitting ready to record, but the funder on the purchase wants a settlement statement to verify that other home did sell, that could cause a delay. So there are things that are just kind of that way, but most of the time, you try to have all that stuff out of the way, and I think some of it's company policy. So for me, to answer your question, get back to that.
No, it's all right.
I could ramble on about stuff. To answer your question is, it'd be really hard to give you a timeline from when I have a pre-approval to when I have a true approval. Like, I try to get a pre-approval and have it be really solid, within 2 to 3 days. But that's really dependent on what that borrower looks like. Are they self-employed, and how many businesses do they own? And how good are they at getting me the documentation I need?
There you go.
And so, pre-approval, the more complex the file, it's also going to change a little bit when it gets to the underwriter. So I had somebody recently that had multiple rental properties. They had retirement income, pension income, a trust, dividend income, and then there's all kinds of, and some of the accounts, they had substantial assets. Some of the accounts were in the trust and some weren't. Some were retirement related, some weren't. There's rules on every single type of income for how long you have to document it for, and for every type of account, and how you can use potential asset income out of that account. So I did it one way at the start, but then a few things changed. I think I don't remember what it was, but we decided to shift accounts around and do it a different way. So from A to B, we got it closed. There was plenty of income there. There was income we didn't even use because it was more work to use it. And so sometimes it's when you have a really complex and strong client like that, it can be a little bit of a work in progress just because like these clients, they had a hard time downloading bank statements from certain entities and getting us what we needed. So then we changed direction. So, you know, it's a great business that way. I mean, it's fun.
It sounds like it's creative.
Yeah. It's one of the most, is dynamic the right word, where there's so many pieces and balls in the air and rules, you know, like conventional FHA, VA, RD, and jumbo, they all have different rules. In conventional, you've got Fannie and Freddie, which each have slightly different rules. In jumbo, basically every lender has their own set of rules in jumbo. And then now you've got the non-QM world, which is all the bank statement income and the asset-based income, and those all have different rules. And then you get into overlays, which means if you're Wells Fargo and we've got Chase and they're both doing FHA loans, the basic FHA rules are the same, but Wells Fargo might stack their own rules on top of FHA, those are called overlays. Chase may have their set of overlays, and then another lender may have no overlays at all. So navigating all that is, I get up every morning with my coffee, and I do a puzzle. I do a Sudoku and then another puzzle. Love puzzles. And so mortgage is one giant puzzle. And that's what's really fun about it, to me. And then you get the human side. That's another puzzle too, right?
That's probably the biggest puzzle of all.
Yeah.
You know, everyone's got a different brain.
Yeah, totally. People react differently. You got the attitudes and the knowledge and all that stuff. So yeah, it's really fun.
No, that's great information. So I want to segue into something that, you know, has been on, I think, a lot of people's minds, you know, specifically after the first of the year, changes in interest rates. You know, the Fed basically said this is coming. And we've had, from what I've heard, just a lot of stair-stepping going on. And then, of course, there's a lot of people, too. You know, I don't know if it's not necessarily all fear-driven. There's some probably, like, facts and reality to it. But the whole thing of, like, it's a bubble. And this bubble's going to pop like it was back in 2007, 8, 9, or 8, 9, 10. Maybe I'm right on that. 8, 9, 10?
07, 08.
Sorry, that's why I talked to the lender, because I think everything it really got bad right around then. Tell us a little bit about what your thoughts are on is a bubble going to pop? Like, what's your opinion?
Sure. I don't think there's a bubble at all. I wish homes were a little more affordable, I think, like everyone. But the big difference between now and 2008 is a small difference is loans are vetted way more than they were in 2008. I was in the business then. You could literally, if you had a 700 plus credit score, you could do one of the liar loans where they didn't verify income. You could walk in and state your income. And literally loan reps would say, if you didn't qualify, tell them to state more money. That's how you got deals done. Stated income, stated asset was great loan. Then they came up with a no ratio, which was just don't put any income down at all. And you could do low down payments with that stuff. And it got even skinnier than that. You could do stated income, stated asset, 5% down, 1 day out of a bankruptcy.
Wow.
Yeah. So
I didn't know that was going on.
Yeah, so those loans are gone. They're illegal. Loans are way vetted way better now. So that's one piece. But the reason it's not a bubble is it's simple supply and demand. So what happened out of 2008 is a lot of builders just got killed and they got out of the business. And so there's been going on, 14 years of not enough homes built in America to keep up with the growing population. So there are just not enough houses, nowhere near enough houses for the amount of people that want to buy. On the demand side, so that's the supply side, not enough houses. Demand side, we've got the millennials, who is the largest buying group in our country, most populous, and many of them are in their 30s now. They've got jobs, they've got down payments, they've got families, and they're interested in buying homes. So you've got a lot of buyers that are going to be around for a while, and you don't have many homes. And we're not building, if you look at the housing statistics, housing starts and stuff like that, we're not building fast enough to meet this demand. And we expect this market's probably going to last 5 years, maybe even 10. Just
no, I heard that, gosh, I was listening to some other podcasts talking about that we're down actually about 3.8 million homes in America. And that's what you're saying, like to catch up to that, the only way they can at the rate at which they're starting to do things, you know, is that like 2025, somewhere around there? Is that what you're thinking? Are you thinking 2027?
Could be longer.
Wow,
Yeah.
That's okay.
Yeah. It's hard to know, you know. I mean, there's some things that could maybe affect it. You know, I think this year we've seen rates go up over 2% in about 2 months or something, which is the sharpest incline in rates we've ever seen. And that's starting. That showed up in some numbers this week where we saw a little less demand. So that's starting to temper buyers a little bit, and I think it will continue. We'll probably see rates go up maybe another 1% or 2% this year, possibly.
Wow.
Depends on how. So the Fed, one of their mandates is to control inflation. So a lot of people think that when the Fed is raising their rate, they're raising mortgage rates. So it's not true, and I'll get back to that here. But the Fed does two things. It can raise the federal funds rate. Okay, they do that to control the economy. So when we have a hot economy, we've got inflation, which means prices are going up, and they raise the federal funds rate to cool down the economy, to try to control inflation. Federal funds affects credit cards, money that banks loan to each other, home equity lines of credit, car loans. It's short-term money, not mortgages. Okay? When they raise the rate, it's often good for mortgages because mortgages hate inflation. There's a long story behind that, which I can tell you if you want. But so when they raise the federal funds rate, it's viewed as they're controlling inflation, and mortgage rates sometimes go down as a result. The other thing the Fed does is they can buy and sell treasuries and mortgage bonds. Okay. So they've been buying a lot of them all during COVID to keep rates low, which helps stimulate the economy. Now they've got all this debt that they've bought. They need to unload it so that they can be ready for the next recession. And it's called, I might blank on the name there. They need to unwind their balance sheet. So they're going to start selling treasuries and mortgage bonds. That will drive mortgage rates up, and they have to do it. They've got to do it this year. So that's probably what's going to really push them up in the long term.
Okay.
So it would be good if they raise the federal funds in the next meeting in May next week, 0.5 to 0.75%, and we're gonna have to feel a little more pain before we can, get somewhere. So anyway, what this means is we'll see. I think potentially we see rates climbing this year some more. That could slow down the buyer side of the market a little. Every time the Fed is in this position and they do this, if you go back and look historically over the last 50, 60, back into the 70s, they drive us into a recession. And that's the cyclical thing that drives my industry, and it drives why we see consolidation and companies being bought and new companies expanding in the easy times and things like that. But basically, if we go into a recession next year, that's not going to, we don't think it's going to beat up housing because there's still, again, too many buyers. But it could bring it back to a little bit more of a normal market where we're not seeing 25 offers on every home, and maybe sellers will fix something if it's broken, you know.
Even Ryan's laughing back there. It's like we've been having some buyer stuff happen recently, and
Yeah.
I've been on both sides, and I watched it. I'm just like, oh my goodness,
Yeah.
it's kind of wild.
Yeah. So I think actually some of this economic chaos could be great for the housing industry. I think it could really just calm it down, because I can't imagine being a first-time home buyer in this market. It would be really stressful. But again, I'm advising people, hey, if you have an opportunity to buy, you most certainly should, because I think homes are going to continue to get more expensive.
Yep.
So
That's great advice.
yeah.
Thank you. All right, let's we've enough about lending for the moment. What are your goals, personal, family, and community for 2022? You know, around Flathead Valley or afar.
Well, my biggest goal really is life balance. Like, I love,
Oh man.
I came here to play, right? I left a dream job in LA because I hated LA. Like, when I got out of college, that's where I worked. And I really came here to play. And so for me, it's been really important to be able to recreate year round, spend time with my family. My wife's a teacher. And so my goal really with the family is, I got one in college and one in high school, is spend time with them before they're, they get busier and busier every year. So we've got a river trip planned. We're going to go float Desolation Gray on the Green River. Pretty stoked on that. Never been on it. Love getting a new river trip under my belt every year if I can.
That sounds like fun.
Work-wise, I'm, as you and I have talked before, I'm at this stage where I'm trying to really fine-tune my day and my habits, which I've probably never had really ideal habits as far as marketing is concerned. And so that's been a big challenge and a focus for me. It's been pretty cool to see changes in my business as a result of that. One of my goals a few years ago is to stay in shape, and I'm in my mid-50s, so you got to train harder and harder every year. I still ski a lot. I coach kids Nordic skiing in the winter, and
Nice.
so I have to stay in pretty good shape. Half of them can out ski me on day one every December. And so,
So you get ready for it.
so I got to stay in shape for that. And so a couple of years ago, I had a knee injury a few years ago, and surgery, and a long time it just never healed, or not 100%. And then about 2 or 3 years ago, a good buddy of mine wanted to get back at mountain biking more. So now I have this group of friends that I bike with about 3 days a week in the summer. And I don't know, maybe 2 years ago, I started hiking the mountain, the ski resort, almost every week.
Nice.
In the summer, and I go the straight up route, the skinning route. And then in the winter, I skin it. And that has been able to really strengthen my leg and my knee, so my knee doesn't hurt anymore. And it's really awesome, because now, going up and skiing on the mountain, even with my kids all day or skiing hard, doesn't bother me that much, and I'm in physical shape to do those things and still play really hard. And so that's definitely an ongoing goal for me, is just staying in shape.
Well, I've skinned the mountain. I used to have like big planks, and I'd skin up there, and it was, man, it's really good when you're up at the top.
Yeah.
That's for sure. I mean, if you're doing that regularly, that is probably one of the best workouts you can possibly do.
Yeah, I love it.
I mean, I totally get it, because I've done it a few times, but I should do it more.
Yeah.
So good for you. That's awesome.
Yeah.
Community, you mentioned teaching kiddos Nordic skiing.
Mm-hmm.
Awesome. That's fantastic.
Yeah.
And what kind of got you into doing that?
Kind of like everything else, it falls into place. So my kids were in it years ago, and they're always short instructors. And I thought, well, shoot, I would like to get better at skate skiing and classic cross-country skiing. I don't. I mean, I go do it, but I don't really know what I'm doing. This was about 6 or 7 years ago, maybe, and so I just basically raised my hand, and my wife was like, "You're crazy. I would never do that."
That's
And
awesome.
she's like, "That is so you. You would just jump into it." And I'm like, "Well, I can skate ski on my alpine boards, from the parking lot to the lift. How hard can it be?" And and then I won a pair of skis at the raffle that year, so I had equipment, and I volunteer is what I don't get paid for that, but it's and it's just been really fun. At the time, like I got to know a bunch of course, my kids' friends and my youngest son's in high school, and so there's a few gals that skied with him that still ski, and they're my buddies. So I see them I don't coach them anymore. They're in the upper leagues now, but I see them on the track, and it's always fun to see them because we're fans of each other.
Yeah, for sure.
And but just being out there, keeps me in shape, and the kids a lot of them are pretty good, and they all out ski me by the end of the year. But yeah, it's really cool. So
I like that.
that's what got me into it. So
What about traveling? Like, you seem like the type of person that has traveled a bpart
yes,
at some point. So, what's your favorite place? Where's your favorite place to travel?
that is a tough one. I know you sent me those list of questions. Partly, one of my favorite places is Mexico because it's simple. It's not America. It's I love who doesn't love the food and who doesn't love a margarita. They got the beaches. They've got some really fantastic history. My grandmother, believe it or not, is Mexican. Let's see, not my grandmother, my great grandmother. So I've actually been down there once with my dad on a genealogical fact-finding trip to some random part, which was, to me, Mexico's a really cool place. And it's really affordable and easy to get to. But, other places like, gosh, I did a trip a long time ago with a good friend of mine who basically had the best way to say it, I guess, is a micro lending organization is the quick answer. And he needed help. We flew to Amman, Jordan, and then we touristed a little bit, and then we drove into the West Bank of Israel, which is also known as Palestine.
Yeah, wow.
To the Arabs. And he was loaning money to small businesses in Palestine. And his whole criteria was he would loan money in places that were overlooked by the U.S. government and loan money to disadvantaged businesses, meaning if you're a disabled business owner or a female business owner, you were more like you got special consideration.
Huh.
And he was a disabled person. He broke his back when he was younger. So that was a fascinating trip because we drove into Jerusalem, and then we drove north. We stayed north of Jerusalem, kind of halfway between there and Ramallah. And the town of Ramallah is notorious because it was one of the terrorist hotspots for a long time. And so when we went into Ramallah, and my buddy basically we're in this hall, and I didn't really, I didn't speak any of their languages there, and the hall filled up, men on one side, women on the other, in this big hall, and I'm like, wow, we're just here interviewing some companies, we're talking small companies, like 2-person companies to 15 people maybe, and I'm like, I thought we were just interviewing, and so the town gave him this award. That's why they were all there. They stood up and gave him a standing ovation
Oh, that's awesome.
for paying attention to them. and helping them lift themselves out of, poverty. And that was a phenomenal trip. Like just seeing the Middle East, and very eye-opening to me of what's going on over there, and the challenges they face, and the beauty. Like, beautiful place, fantastic food. Would love to go back. So
that's one that hasn't been on my radar, but you kind of made it. That sounds kind of cool.
Yeah, I think the trick is finding somewhere that's safer to go, obviously.
But it's good to get out of your comfort zone. Like, that's
Totally.
the thing. Is like that right now. Like, truly, my like, now the hair on my neck kind of goes up. Like, that sounds like scary. But also, there's like that sense of adventure behind it too.
It was scary. I mean, we stayed every night at hotels that the little road that goes like into the hotel, and then it's the covered thing where you get out of and the guys come get your bags at night. Or in between cars, they put up these steel things pop out of the road and block cars from coming in so that people can't drive in with a car full of bombs. Yeah, terrorist country. Pretty crazy.
Wow.
But like, we have some people I know that just went to Turkey, a couple different families that just went to Turkey. Love to go to Turkey. Like, it's just so different than here. And
I would too.
I really like going places that are different than what we have. So.
All right. Well, I think I'm going to ask you one more question. Actually, there's maybe two more questions, but favorite place to ski? And
Ooh.
It doesn't have to be Whitefish, Montana. Like,
Yeah,
Whitefish is pretty awesome. Don't worry. Like, I love Whitefish Mountain Resort, aka Big Mountain. But where do you think is the best place you ever skied?
Gosh. Well, I haven't skied anywhere in Europe yet, but probably Revelstoke is my favorite, I think.
Okay.
Yeah. I don't know, though. That's a hard one.
That's all right.
Lost Trail.
Oh, interesting.
I love those little resorts, too.
Okay.
We had a great day at Discovery.
Yeah, you get good powder there. That thing is like...
Yeah, we did hit a great powder day, but also the thing I love about it is it's just so mellow. You go lunch at the one cafeteria and you have a beer, and everyone's friendly and it's chill, and then you're talking to everyone in the parking lot because there's only 50 cars left in the parking lot, and so I really like those small resorts.
Yeah, my son and I we went to Lookout Pass on that one amazing day last year in February, and it was like 2 feet of powder, and we hadn't been to a resort like that yet, and it was so cool. It's like, here's hot chocolate, there's a couple burgers, some granola bars, a soda fountain, and everyone's sitting together kind of in a cafeteria style.
Yeah.
But the mountain was just epic that day. And so I understand where you're coming from.
Yeah, it's Revelstoke's kind of in between. Like, it still has a pretty mom and pop feel, but there's a lot of people that ski there now and know about it. But it's just a steep hill, like steep and long, and you're gonna get your money's worth.
Oh,
yeah. And I've always hit good snow up there. Nice. So, yeah.
Well, so how do we find you? Like, what's the best form? I mean, phone calls. I know you said, like, do you have any handles on the old social media or any other ways to get a hold of you than just a phone call?
Yep. Well, you can find me on Facebook, Ed Nissen, and right now it's Ed Nissen Lend US. It's on my list. I gotta, of course, be compliant and get that changed over to Cross Country Mortgage here pretty soon. So I have a business page, and then I'm on LinkedIn still as Ed Nissen with Lend US, and that'll get changed. And so you can find me those two places. My cell phone, 406-261-9223.
Okay.
That's the best way. That won't change. And other than that, I'm in Whitefish on Baker Ave, 1581 Baker Ave, Suite B. So you can always come find me there. And I don't even think I have a landing page yet at my new employer. So that's in the works, I know, but it wasn't there this morning.
Okay.
So, yep.
So basically the best thing is to give Ed a call as of right now, and everything will be updated in the next couple weeks. But this has been a enlightening conversation. I really, really appreciate your time today, and I mean, just what I learned already from talking to you over the past, such and such amount of months. But just in this conversation right now, I mean, I learned more, so that's huge.
Yeah, I love sharing it. I love, yeah.
That's good stuff.
Cool.
Cool. Well, folks, thank you. We've wrapped up episode number 4 with Ed Nissen from, I'm going to say Cross Country Mortgage. I have to look down every single time.
You got it, buddy.
But folks, we want some feedback. How are things going in the viewing world? Please obviously like, subscribe, but also drop comments below. What do you want to hear on this show? Who's the next guest? I mean, we have some ideas, but we'd love to hear it from our listeners. So, like I said, please like, subscribe, say hi to me, and call Ed and get pre-approved, and then call me.
Yeah,
or call me, and I'll give you to Ed. Either way is fine. So anyway, Ed, thanks, man.
Thank you.
Appreciate the time today.
I appreciate it.
Yeah,
Thank
thank
you
for your time. Bye for now.
My pleasure.